This is Craig Helgard with your Financial Issues Ag Update. Corn prices were higher on talk of first crop corn yields in northern Brazil being at least 20% below expectations due to early dry weather. Traders seem somewhat befuddled by the lack of farmers selling here in the United States, since March is typically a month with big cash flow needs. Trump money is obviously helping out there and keeping farmers' corn in the bins. It's hard to imagine enough corn moving now to satisfy the needs of the market before the agronomy season gets rolling. And with that in mind, I would look for the basis to continue to be strong. The weekly ethanol report had daily ethanol production up 25,000 barrels per day. Ethanol stocks were also up sharply in response to the increased production. As I record this, the overnight spot corn futures are trading 3 cents lower. Soybeans were firm, with bull spreading being the feature again yesterday as they are driven by the prospect of Chinese business. The Brazilian real made another new low against the U.S. dollar yesterday, which keeps the Brazilian FOB values cheaper than U.S. offers. Brazil is currently $6 per ton cheaper than U.S. on beans coming out of the Pacific Northwest and $14 per ton cheaper out of the U.S. Gulf. Brazil harvest is running about 13% behind normal pace. Now, yesterday, Informa increased the South American production by 3 million metric tons in Brazil and 2 million metric tons in Argentina. They now have the combined South American production, including Paraguay, at 2 times the U.S. production this past year. To say that the bean market needs Chinese demand is an understatement. In the overnight trade, spot soybean futures are trading down a penny. Wheat struggled yesterday with no confirmation of the rumored Chinese business that was in the market on Tuesday. The Ukraine Ag Ministry is talking about their wheat production at 23 million metric tons. That's down from the previous estimate of 28 million. That's due to poor crop conditions and less acres being planted in Ukraine. Hopefully we'll get some good export numbers today to support the market, but in the overnight trade, we have Chicago and Kansas City both trading unchanged, while Minneapolis is a penny and a half higher as I record this. Cotton market posted a slight gain yesterday, with May futures closing up 21 cents to settle at $62.98. In the overnight trade, we have spot futures trading an additional 36 points higher. The livestock futures markets turned in a strong performance. We had April live cattle futures finishing up $1.17.5, while April feeder cattle futures were $1.77.5 higher. Lean hog futures had a stronger session, with the April futures finishing the day 75 cents higher. Class 3 milk futures, on the other hand, retreated, with April futures closing down 7 points as they settle at $16.01. In the overnight trade, we have spot futures in that market 3 points higher. The cash livestock markets were split. At the close, we had choice beef boxes 20 cents higher to close at $206.82, while selects were down $1.19 as they dropped down to $201.51. Pork carcass values dropped by 31 cents as they settled at $65.74. This has been Craig Helgard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.